Hey everyone, welcome back to Fiscal Voyage. And today's video, we're going to talk about the two stocks that I bought on Thursday, just before the market huge rally on Friday, and one stock that I bought a few weeks ago in the previous video, and I'm interested in buying more shares. And I'm going to talk to about those three different stocks, the two that I bought, and then one I'm interested in buying more later this week. So let's get into the video. So first off, let's cover the two stocks that I bought. So I bought SR, it's a gas utility company, and EVRG, another utility company. You can see here I bought 30 shares at 59.70, around almost 1800. And then EVRG, I bought 4 shares at 52.97, about $211. I was trying to get into that $2,000 range. My normal buys are around $2,000. And then this position, I actually made it a full position, not full position, but 100 lot of shares. So I wanted to get to that 100. This one next, I want to do 100 shares as well. Hopefully I get a slight pullback. But I'll show you why I bought more shares of these companies. So first we go with SR, so Spire Inc. You can see here gas utility is an A minus credit rating, which is good credit rating, S&P credit, and the long-term debt to cap ratio at 43.28%, which is real good. So we remove the price from the chart from Fast Graph here. You can see here the company, for most utility companies, they're very consistent. They grow not a huge rate, 15%, 20% growth rates in earnings, but they do grow at a nice 5 to 6% annual earnings growth consistency. You can see here over the past 20 years, this averaged about 4.39% in growth in earnings. And of course, there's been years where it grows more than that. Over here in 2008 and 9, 14%, 11%. And over here, 2016, at 7%. And 2021, 29%. And then analysts are expecting the next few years to grow around 5 to 7% for 2025 and 2026. So we put the price back in the chart. You can see here there's times where there's good times to buy and then bad times to buy. And you can see here when it's overvalued around the 20 PE area or more, that's bad time to buy. Overvaluations, so for example, you were to buy it here even at a 20 PE right here, you can see at the current price you'll be down around 17%. Annual return will be a little positive. Your total return of around 5%. That's because of the dividend. That's why dividend is so great. You could be wrong and still make money because you just let the compounding effect and continue to hold the company for long term while continue to raise the dividend. But obviously, the best time to buy it is when it's around this 13 PE multiple, under 13, under 14, or anywhere under the 15 multiple, which is the orange line. And you can see here, this is why I bought more shares here. Because it's under that, it's undervalued around the 14 multiple. So if we shorten this time period, you can see here at Friday's closing price at 61.29, it has a 14.47 multiple, which is still undervalued. And if it to revert back to its normal multiple around 17, you can see here you can have an 18.5% annual rate of return for the next few years, giving you almost a 50% total return in 2 years. So that's great. This is why I bought shares of this company. And then we could look at other analysts. If we go to Morningstar and check out what Morningstar says about this company here, we go to fundamentals here in Interactive Broker and Morningstar here, and then go look at the report. You can see here they give it a 5-star rating. It has the fair price of $66.46, so it's undervalued based on Morningstar, and it's undervalued based on CFRA. You can see here we go to the stock symbol SR over here, and the CFRA gives it a buy rating. You can see here about a 4-star rating buy. Valuation is positive. I like quality is positive. The growth is neutral again because it's a utility stock. The street sentiment is negative, and this is probably because of interest rate. They don't know if they're gonna be cutting this year or maybe possibly increasing. But based on the CPI number and how the market reacted on Friday, it looks like they're gonna start. Is looking on the positive side of potential interest cuts by the Fed later this year. So we'll see how that goes. But that's why I bought shares of this company. Another reason also, I bought it on Thursday, on this day here. This is the daily chart. So let me make this bigger here. I bought it Thursday here around 59.60. So it was up that day, and then it had a huge day on Friday, big day on Friday. But I bought it also because of this drop. This drop represents from around here to here, it represents a 7% drop in price in basically a week. And that caught my eyes to add more shares at this price point. And you can see here is above the 200 daily moving average, and right now it just got above the 50 daily moving average, which is all good indicators. And at this point the RSI was around 34, so these are good buying opportunities there when the RSI is in the low. And another thing I really like in the monthly chart, this is the monthly 200 moving average, and it's there in bounce right here, and it's kind of like battling this here and a potential bounce. So that's why I bought more shares around this area. You can see here it bounced here and it bounced here. Almost got near it during COVID lows, but then it's bouncing here. So we have undervaluation, good technical charts, quality company, a dividend growth company, and let's talk about the dividend growth. You can see here for the past few years it's been growing dividends. The most recent increase was 5.11%, but it's been growing dividends a little over 5%, which is as good. I like that because of the utility. It has a safe dividend, almost a 5% currently dividend yield, and a 6.9% earnings yield. So that's real good. Earnings yield, dividend yield, credit rating. So this is why I like this company. This is why I bought shares of this. So if we go to the next stock, AVRG, and let's go over here as well into the Schwab and look at things here. So we go to Max EVRG. You can see here again, it's electric utilities, and a little more cyclical than the SR stock, but still in the upward trend. You can see there analysts are expecting 5% growth. Again, over the 20 years the company's been growing at 4%. There's BBB plus credit ratings, 50% long-term debt to cap, earnings yields of 6.7. and you can see here there's been good times and bad time to buy. Bad time, of course, when it's over a PE of 20 or 23, and then good times when it has that 15 multiple or less PE multiple. So this is why I've been buying shares of this company, and I would like to buy more shares. And if we go to Morningstar here, Morningstar gives a 4-star credit rating, and you can see here 4-star, average price fair value at $65. And if we scroll down here, I like to look at this here. You can see earnings are expected to continue to increase here. Diluted earnings, you can see here for 2023, $3.54. 2024, they're estimating $3.79. 2025, $4.13, and 2026, $4.29. Price to sale, you can see here it's lower than 2022, and they're expected to, at the current price, on a downward trend. So that means it's undervalued. And then dividends here also, analysts are expecting a continued dividend increase, so I like that a lot. And then CFRA also gives it a outperformance. Oh, not this one there, excuse me, clicked on the wrong one, but this one gives it a good score there. But CFRA gives it a 4-star with a price target 63, and then the fair price, it actually doesn't have a fair value rank there. But again, back to earnings expectations, 2024 $3.83, and 2025 $4.04. So earnings are continuing to expected to grow. We go back to fast graph. You can see here the company is in an uptrend. Performance, if we look at the dividend growth, they've been growing dividends every year around 5%. It does go lower to 3% in some years there, but because I'm getting it an undervalued almost 7% yield, this is why I bought shares. And we go to the stock, technically again this stock had a downwards, the same thing with most utility and REITs. In the past week they had a downtrend. Over here it was down almost 7%. And then again, I bought it here on Thursday, and it had this huge run up on Friday, which I like and don't like at the same time because I want to add more shares. And then why I buy it, over here you can see the weekly chart. This right now, this looks like a upward trend. upward trend. Now we have some resistance here around $60, so it could get a pullback. But right now it looks like it wants to head back to this $60 range, $57 to $60. We have strong resistance here. You can see here, strong resistance. So there's gonna be some battle there between the buyers and seller. But also, if we look at the 3 months chart, you can see here, this is the 50 moving average on the 3 month, and the company has been bouncing here around the $50 range. So $50 range, if you get $50, make sure you buy some shares because it's a good price point for this company. So that's why I bought shares, more shares of EVRG, and I want to get this to 100 shares. I own about 70 shares at a cost basis about, I think, $51 or something like that. But anyway, so the last stock, the boring stock that I want to talk about that I've covered in a previous video is this here, DOX, Amdocs Limited. This stock's been down. If we go to the chart, you can see here, I bought it, my first initial position around this day after earnings on May 9th. And it had a nice run up. I was up like 5% or so, but then it's received a pullback, and I'm under the my cost basis. So I'm interested in buying more shares. We have strong support here, you see here, and here and here. So strong support, and it has a weekly downtrend. You know, it's been going down. So almost, let me see, like 2 months since March, it's dropped about 20%. Here and 20%. So this is why I'm interested in buying more shares of this company, and it's on the monthly 50 moving average, and that's why I would like to buy more shares. And you can see here earnings continue to grow, so we can see as potentially 20% annual return for the next few years. This is why I like buying this company. So thank you for watching, and make sure if you're new, hit the subscribe button and like this video if you're interested in more videos like this. Thank you, and I'll see you on the next one.